You're listening to Real Talk Texas with local expert Steve Hakes. Now, here's Steve.
Welcome back. Today we're talking about new home building in the North Texas market, which is very different than what you might hear on national news. It's actually doing very well here in the DFW Metroplex especially. And before the break, we learned about what a certified master builder is, and that is that Clarity Homes and Bannister Homes, they are a certified master builder. And they, as a listener out there, if you're thinking about building, I mean, I really would take a hard look at the builder that you're choosing and make sure they have that designation, because that does say a lot about the company you're dealing with and if they're going to be there 10 years down the road to handle that warranty issue that might come up at that point. And so now I want to talk about the different financial tools, and I'd say I'm a listener out there, guys, and I've decided, hey, I'm ready to go forward. I'm ready to make a move. I'm either renting or I have my own house right now, but I'm really thinking about getting into a new home. And so, I want to bring Daniel Herron with Affiliated Bank and Joe Barnard with Affiliated Bank into the conversation here and talk about that. So, guys, if I'm getting ready to go, what's the first thing I should do?
Well, Steve, I think the first thing that any individual should do would be to talk to a lender at a bank, like Affiliated Bank. We're a full-service community bank, and at that point in time, we can help them identify what they're qualified for. We have the benefit of also not only having a full-service bank, but a full-service mortgage division, where we can not only handle the interim construction side, also the permanent mortgage side, but we've also developed the ability where we have a one-time close program which combines the two, interim construction loan and mortgage loan, into one, and as the name implies, involves only one closing, which helps the customer with a cost savings, but it also gives them the benefit of being able to get into their home with a minimal amount of money out of pocket, depending if they have a house to sell. We also can work with them that way with the various different products that we offer.
I guess one of the first things I think as a consumer, and so many people go online today, and so they'll get on financial calculators and things like that. Maybe they'll look at getting. I've had some realtors actually say they won't accept a pre-qualification that's done from an online company because they know that online company hasn't looked at anything. And in today's lending market, where everything has been constricting, and the documentation that's done, I've heard one article, or actually read an article yesterday, where people have said, we no longer have mortgage underwriters out there. We have auditors that are doing loans. And so what I think when you're going online, you got to be very careful, because it may be a pre-qualification online, but it may not really give you a true like pre-approval or whatever. So if I'm a consumer out there listening today, I would want to reach out to somebody at Affiliated Bank, and I would want to talk to a loan professional. What would I need to bring to make sure that I had a real qualification?
Well, other than the standard residential loan application that the customer would fill out, we always recommend the customer bring at least 2 years of tax returns. If they're self-employed, would need some business financials as well. For a W-2 employee, just a current pay stub, standard bank statements, income and asset statements as well, and then just we would sit down and evaluate the credit. We would pull a hard credit or pull, and then at that point in time, we would evaluate and perform a full credit underwrite as if the house was built, and then it's just subject to the house being built. Then at the end of construction, we can re-verify everything and then put them in whatever mortgage product that they want.
So one of the things I also consult with my clients, and when I say bank statements, a lot of times they'll bring in the cover sheet of the bank statement, and that's really when you do this, guys. If you're listening out there, I don't care what lender you're dealing with. Today's market is very, very different in getting loans. So when you do bring in your bank statements, bring in all pages, every page of it. So that's really important.
And Steve, along those same lines, this is Joe. A lot of folks want to bring in their tax returns, and they want to bring just the first 2 pages. And unfortunately, we need every single page, every addendum that there is to it. And it's not just us; any lender's going to need that. But a lot of folks just don't understand that at this point. Yeah,
and that goes back to, how is an online pre-approval going to really tell a realtor or tell a builder this person's really qualified? And I'm I guess the reason I say about underwriting and auditing is that as a consumer out there, please don't feel like we're asking for everything. But we are. We are.
And that's the first thing we'll tell you. Be prepared to be surprised and be prepared to be asked for something else, because everything seems to begat something else beyond there. So it's a challenge, and it's very frustrating. And it's not just us. It's everybody who's trying to put a loan into the secondary market is playing by this same set of rules these days.
That's right, and so you make sure that you come fully prepared. What's really good, Daniel and Joe, you can probably you could call someone if you're listening out there and get a list of what you would need to bring in. And I highly recommend when I meet with my clients, I send them the list and say, okay, here's a quick checklist of what we need from you. And in that list, it does say all pages. And on internet statements, sometimes it doesn't have your name on it or it doesn't have the account number because it's for ID protection. And so you may have to actually go there and download a full PDF and things like that and bring that in, talk to your loan officer or a loan professional at affiliated bank. That way they can really and it's really in your best interest as a borrower out there to give everything up front. The more you can give your loan professional up front, the more you can count on that approval being there. So if you're holding something back or you didn't get your 2009s or your 2011s, you just did them, 2011 tax returns, you just turned them in, we're going to verify all that stuff with the IRS. And it takes them, it always happens, April 15th, it takes them probably 30, 60 days to actually get it in their system so we can verify what you gave us was exactly what was given to the IRS. Same thing just happened right now with the October 15th deadline for business owners. A lot of people that own businesses, they wait to turn in their taxes until the very last minute. So the IRS, they get slammed too. So it takes a little while to get that to them. So a lot of times we say 2 years, but at this time of the year, a lot of times I'm saying, bring me 3 years, because the more is better. Where in the old lending environment that we came from in the early 2000s with the limited documentation, things like that, if that's the last time you got a mortgage, then what I really try to tell people is it's very, very different now. I mean, you have to disclose everything, and that way we know you're truly qualified, and we can give our builders and our realtors a true qualification. So, moving on from that topic, because we could go on all day about the market today, Daniel, in working in the construction department for Affiliated Bank, I'm ready to go build a house. Maybe I found a lot, and I'm going to build over the next year. I want to get my architect. I want to do some things like that. If I were to buy a lot, what's that market look like today as far as getting a lot loan?
Well, Affiliated Bank does offer lot loans. We're, as a community bank, that's one of the products that we offer. So a traditional lot loan generally requires a 25% down payment, and then we would just make you a lot loan with the hopes that in the next 12 to 24 months you're going to build a home on it.
And that 25% down payment may sound like a lot because a lot of us are conditioned to low down payment mortgages, but that 25% is on the lot amount, which is just a portion of probably what you're going to be putting down on the total construction loan later on. So it's not a significant number in most cases.
And Joe, I think that's a good point. And in addition, in a lot of cases, lot loans were 50% down.
Yeah.
So it's really not that bad. Okay, so if I buy my lot, now I'm ready. I found my builder. I've got my plans. I've found my architect. I'm ready to build a house. Now, what are my options? How do I build a house?
Once you've selected your builder and got your financing in place, and our Affiliated Bank, we have two options. We have the traditional interim construction loan, and then we'd have our one-time close option that I mentioned earlier, which is the interim construction loan combined with a mortgage loan at the end.
What do you mean by interim? I'm not real.
It's a traditional construction loan. Typically, we put it on a 12-month construction term. You pay interest only on the amount drawn during the construction process. Then with an interim construction loan at the end, you're required to refinance that into a traditional 30-year fixed rate mortgage or 15-year fixed, whatever your mortgage professional and you want at that time. With a benefit of the one-time close is that rather than having to go back and reclose again, you still have to requalify or get credit documents updated. But the benefit of that is you don't have to go back to the title company to reclose. So there's an inherent cost savings of only having one closing during the one-time close process.
Well, and there are a couple other advantages to that too that are not as obvious. One of them, and I kind of go back to the time before the mortgage and housing meltdown. We used to do one-time closes that were truly one-time closes where they closed once, never had to requalify again. When the house is completed, it converted into that permanent fixed-rate mortgage. The folks in the secondary market, and by that I mean the people like Fannie Mae and Freddie Mac and those type of places where you're able to get the very, very best terms, it's no longer possible to do that way. You still have to requalify at the end of the construction period, even on the one-time close. But the unique aspect of the affiliated bank one-time close is if you have a life event that occurs or something happens, or maybe just the mortgage markets go away and there's not another traditional product that you qualify for at the time the house is complete, you've still got a 30-year mortgage on your house. You have a loan that you can pay. It's not at as desirable of terms as the secondary market would otherwise be, but it's pretty darn close. But at least you've got the security that you have a loan and you won't have a problem getting that loan placed at the end of the construction period.
And that way you're protected when you're building the house and your family gets all excited about moving into that house. And so with the affiliated bank one-time close, which is different than others that I've seen in the marketplace, that you used to see in the marketplace actually, there's very few places that do this type of loan today. And an affiliated bank, being a community bank, is really invested in trying to help the housing market in our local communities here in North Texas. And that's just a great product. If you're just tuning in, you're listening to Real Talk Texas. And today we're talking about new home building in North Texas and how the fact that we've got a shortage of homes on the market. We really feel like the building industry in North Texas is coming back, and how Affiliated Bank is here to support that effort. So stay tuned. We're going to come back. We're going to talk more with Joe, Daniel, and Deborah, and we're going to kind of bring this all together on how to go forward with building a new house.